Good morning, Udayan. How are you,
Good morning.
Udayan?
Good morning. How are you?
Good, good. Warm welcome to everyone on a warm summer day. It's really hot out here. Today, we will discuss with Udayan on the topic of customer engagement in banking. Our participation across this platform, YouTube and Twitter, is getting us many more participants than before. It's a strong indictment of a strategy to engage subject matter experts like Mr. Goyal himself into thoughtful and incisive discussions that are beneficial to participants. With many more people participating in these discussions, we are getting stronger in our resolve to fight the virus. I think the due goes to our frontline warriors who are fighting a war to prevent the spread of virus and to keep us safe. Let's help the warriors by staying home and staying safe. In this need of hour, I'm proud to inform you that EPS is a proud sponsor of Roti Bank, who provide food every day to the poor and needy. Thank you, EPS team. Welcome, Udayan, to today's session. As usual, it's going to be of interest when Udayan speaks with his vast knowledge and experience with banks, fintech technology, and exploring new ideas of cutting-edge technology business before he actually invests. Okay, so we have the right person to talk about today's topic. So like I said, our topic of discussion is redefining customer engagement. So today we live in a digital world. Consider the average banking customer's day. Okay, let's take how, maybe she wakes up on an alarm set by a smartphone or maybe Alexa or Siri. She takes a Uber, Ola, as the case may be, to an early morning meeting, orders her groceries online, reads books, and watches movie online. Everything is seamless. But when it comes to opening an account with most banks and some other transactions, why is it that she is now being forced to show up, say, at a physical bank during business hours, Udayan?
So yeah, it's a very good topic, and if you remember in the last few discussions that we've had, I talked quite extensively about a number of emerging themes. One of the emerging themes is open banking and the data that's coming out of open banking. Another emerging theme is the use of information to customize financial services and to embed those financial services to the concept of contextualized financial services. So all of these themes essentially are the digitization of the banking industry and the digitization of this financial services industry in a way that is more logical and convenient to consumers. So, as a preface, let me say, if you think about the digital revolution has, if you think about the way we shop, it's completely refashioned the way we shop. And now with COVID, we're even accelerating the concept of e-commerce and online shopping. It's accelerated and changed the way we interact with people, with our friends, with others, with colleagues. So with the combination of LinkedIn, Facebook, Twitter, all the different social media platforms, it's created a different engagement point for all of us. It's completely changed the way we think about services. So we've moved from own services to on-demand services, things like Uber and others. It's completely changed the way we look for information. So we don't have, we used to have something called Encyclopedia Britannica when we were younger. Now we have Google. So but if you think about financial services, it hasn't really evolved the way all of these other industries have evolved and all these other services have evolved. And the truth is that you don't wake up in the morning and say, I want to get a loan or I would like to get a savings account. You wake up in the morning, you say, I'd like to buy a car, or I'd like to buy a house, and then you embed the finance function within that purchase, right? So everything that we do in financial services typically is contextualized. And so if you embed it in a way that's logical to the consumer, then it becomes very real for the consumer. And at the same time, keep in mind that accelerated by the COVID crisis, the whole concept of the physical touch point for financial services is completely losing its place in the world. So for many people in the emerging generation, the concept of going to a bank branch is not even a memory that they have, and for many of us, it's becoming a distant memory. And this
Yeah.
concept will continue to evolve, because I don't believe that the financial services industry requires any significant, or frankly any touch point that's a physical touch point. Unless you're getting into very high end wealth management, which is a very service driven and service oriented industry. I think that it just like most people just want financial services to work. So everything should be effortless. If you buy something online, real world, anywhere, it should be effortless. We shouldn't have to work to send the money over. So it wasn't. If you think about the first evolution of this, it was really when PayPal embedded itself into eBay,
Yeah.
and since then it's things have moved on, and now we take it for granted that when we buy something online, there's a way to embed the payment. We need to think about this idea of context throughout in everything we do, and this paradigm shift is going to happen. We're going to very quickly accommodate the digital native customer journey in everything we do. And that's going to happen through some of those areas that I touched on earlier. The highlight of open data, the highlight, the evolution of digital, the evolution of the availability of open banking through regulatory change, all of these things. So people basically want their banking services to meet them where they are, embedded within the products and channels that they have. So, before we get into this further, what I thought I would try and do is, a few years ago, I talked about this extensively at Cybos, which is the world's largest financial services conference, and I actually made a video,
Mhm.
for that, and I think it really talks and gives everybody an introduction. So I'm gonna just roll that video for everybody, and then we can continue the discussion.
Sure,
So
sure.
just bear with me.
Absolutely. Yeah.
Do you wake up thinking, is today a good day to get a loan? Were you dreaming of mortgages, car financing, or a pension plan? Or do you dream of buying a house, a car, or retiring early? In life, we consume products contextually. So why should banking and financial services be any different? Today's financial institutions are obsessed with a product-centric approach. People today want to consume experiences, not products. The great enabler of this is the continued rise of data, processing power, the ever-expanding connectivity amongst the people. This is Mr. FinServe. He does business the old way and has been innovating for the future. Mr. FinServe has a great capability to provide products, but lacks an understanding of his customers and what exactly they want. And then there's the zeitgeist, the data aggregator, the deep thinker, Miss Tech. She is quick, efficient, and gets products delivered to you in the comfort of your home. She knows exactly what you want and converts this share of mind into a share of wallet in just a click. Imagine that Mr. FinServe and Miss Tech join hands. Miss Tech would have access to Mr. FinServe's products and customized services based on all the data. Could that change the future? Jack and Katie are expecting their firstborn. We see them searching for baby products from their smart devices, and as a consequence of the data shared by them, they receive a notification. A family health insurance plan that includes their child. This is customized through the data that Ms. Tech has meticulously collected and based on their income and spending activities, priced and provided by Mr. FinServe. The new plan also includes wearable devices for the family, allowing for real-time pricing of the ongoing premium. Today, they have a two-seater sports car, which is not the best option with a baby on its way. So, how about a new family-friendly car? Ms. Tech suggests not only a new car, but a financing and insurance package provided by Mr. FinServe, all available in just one click. Indeed, this pattern of experience continues. Jack and Katie have their next child, or indeed children, the unexpected twins. Now they need a bigger home. So Tech offers a duplex with approved mortgage from Mr. FinServ, along with combined home and life insurance policy. They can move from their current compact home to one that will have room for five. Because people don't buy mortgages, they buy homes. Well, as they say, it's happening. It is. Jack and Katie have their financial guardians looking over their shoulders to safeguard their financial future. And with their finances in good order, they can focus on the important things in life, the things that matter. Their lives are taking a leap towards a brighter future, a future that would transform the ways of now. When Mr. FinServ and Miss Tech join forces, the world would awaken to witness a new dawn, the dawn of an experience-based approach to the consumption of financial services. Welcome to this new reality, where every customer will be placed in a protective system that works around the clock, the era of contextual financial services, in which what you're seeking seeks you.
That was wonderful. Yeah.
Great. So I think, I guess the concept behind that, as I said, this is kind of where I believe the digital journey is starting to go for the financial services industry. The idea is that it really doesn't, it's no longer a front and foremost product set. It becomes something that's embedded into an experience set. And as we consume the experiences, it logically is intertwined with those experiences that we pick up. So that's a little bit of a thought process and an introduction to the topic.
Yeah. So that's what I think the days of the digital transformation is happening. It's effortless, click of a button, round the clock, and textual. I think that's what was the message that you gave for all the services that comes across, as one does his or her work. So a great video, Udayan. Thank you very much. I hope the participants liked it. So Udayan, I came across an interesting question. It said, who will have new and different banking needs that the industry will have to design and redesign products and services for? And the answer was equally interesting. Okay, it said baby bloomers. Okay, because there was this baby boom post World War II, as people were happy that the war has ended. And so there was a baby boom. Now we are in the midst of a lockdown. Everybody's at home. Will there be any new banking needs for the post-COVID born babies?
Yeah, I mean, obviously, I think that in itself is essentially what we're all sort of implying here, that the journey towards digital is going to be massively accelerated in a post-COVID world. We're already starting to talk extensively about the concept of a low-touch economy, which means that we start to consume and we start to get delivery and we start to think about everything predominantly in a digital format. The concept of the physical starts to recede, and it starts to recede largely not just because there's this concept of infection transfer on physical. Actually, it's because digital can be significantly more efficient than the physical processes that we've done. And the only reason we didn't move away from those physical processes over the last few years or the last decade has been because we are habituated in terms of consumption of that physical. Now, if we are forced to rethink the paradigm of how we consume into a digital format, then we do very quickly start to think about how to consume in a more digital format. So, you touched, I think, at the beginning around Alexa and Siri and some of these digital, the Google Assistant and some of these things, and how they can embed. You saw in the video that in effect, we have the two protagonists, and they kind of represent a little bit some of that AI expertise that sits up in the cloud and in the web. So this is now starting to become very real, the concept of you asking one of these digital assistants to help with something related to your financial service. Then they, through interfaces and APIs into product banking providers and insurance providers, are able to do the interchange of data in real time and provide a response in real time. So they can, for example, analyze your financial situation, look at all the current mortgage rates if you're looking at a mortgage for your house, and look at what you can afford, and then suggest the best option that's available that's pre-approved to you. And this is completely a different customer journey from
Yeah.
the way most people are used to looking at mortgages. This had already started to happen in a big way in places like Australia. CBA, which is the Commercial Bank of Australia, has created an application which people use, which is also connected into the real estate. There's a national real estate database that people use. So you can walk down the street, and if a house is for sale, you can take a picture of the house on the app. The app will then look up the price of the house with the real estate provider. It'll then analyze your personal situation and analyze your affordability, and then it'll give you a pre-approved mortgage and affordability for that house. So you immediately, if you want to buy the house, then you just click, and it'll actually create a full customized journey, fully digital, from the time you click to the time you close on the house and the financing is closed and the monies are paid to all the different parties. So it's a very digitally oriented customer journey. And this is, I think, the expectation that the post-COVID generation will not only have, but will grow up in, because this is actually what's going to rapidly be available.
Yeah, absolutely. Thank you. So, I think banks have been pretty much adopting to various products and designs based on what's the requirement of the customers. Many of the tech-oriented banks have been doing that. So we had products and designs when the baby bloomers came, the next gen came, millennials, Gen X, Gen Z, and what have you. And now we have the digital natives, that is those born with laptops, iPad, and social media right from the cradle. They seem to be having that. Okay, so their world is different. Okay, it's completely different from what I think at least I have gone through. So how should banks design products and solutions to this digital native?
So I think the banks need to focus on doing what they are good at. And what they are good at is risk and balance sheet.
Yeah.
So for a reason, a bank is a regulated entity. It's a regulated entity because its main objective purpose is to safeguard your money. So
Mhm.
if you give a bank money and the bank is holding your money, you want to make sure that that bank is well regulated, is safe, and your money is safe. And that's the reason you have regulators. And ultimately, the reason you have regulators is because the people who ensure the well being of a bank isn't really the capital holders of the bank. Ultimately, it is the government that the bank is being regulated by. Because if there's a bank that fails, there's typically either a deposit insurance scheme, or even if there isn't, the regulator will typically step in and protect deposit holders. And that loss is typically borne by taxpayers. And so there's a reason why banks are regulated, and there's a reason why banks need to be regulated well. Anything that touches money, especially holding money, needs to be well regulated. Now, that's what they're good at, right? What they're not so good at is building customer experiences. What they're not so good at is building any sort of experience. What they're not good at is being digitally native, as you talked about, because that's not, again, where most bankers in this current generation have grown up in. And so that
Yeah.
concept becomes very difficult. So really the way to play that is for banks, and we talked about this previously in open banking, is for banks to open up APIs where other providers can write into that API and be able to embed the product that the bank. So let's say the bank is offering a lending product. So this is a very well-known company globally called Klarna, now a multi-billion-dollar company. And if you're a seller of goods on the internet, you can embed the Klarna product in your checkout page. So let's say, let's postulate you're selling some clothes, and somebody comes in, they buy 50,000 rupees worth of clothes, right? And
Yeah.
now they're on the checkout page, and there's a Klarna button. And what the Klarna button does is you click into it, and it'll basically allow you to buy those clothes for 10 installments of 5,000 rupees each, um, rather than a 50,000. And the way they've done that is that the clothes selling e-commerce company has written into the Klarna API, when the customer's filling up its uh, its checkout, it
Yeah.
sends all that information to Klarna, Klarna then analyzes the information and the risk associated with both the retailer, because it's ultimately retailer risk that they're taking, as well as the type of customer that's buying, the proponency to pay, etc., and making a real-time decision on whether they're willing to take the risk on of that installment credit scheme. And then once you click it, you can do it real time. And so there you have a provider who is, who is specialized in providing the credit, but it's sitting behind the seller, and you're embedding the finance into the seller, into the seller, and as part of the customer journey. And this is really where I think the banks and insurance companies can do very, very well, is really embedding themselves. And that's why there's been a scramble over the last few years around some of the larger financial institutions trying to cut deals with the big tech providers, with the FANGs, the
Yeah.
Facebook, Amazon, Netflix, Googles of this world. So if you look at Berkshire Hathaway, who's working with Amazon, or JP Morgan, who's working with Amazon, Goldman Sachs working with Apple, these are
Yeah.
all examples of large financial services groups who've understood that these big technology companies are, have really the customer engagement interface almost as a monopoly to themselves. And as a result, they understand they need to embed their financial services into that point of customer engagement. If you take an example of Facebook, Facebook has vast knowledge of users, and it can use that uh, knowledge to become really a global financial services powerhouse. So one of the things that we've already seen, so one of the things they've done is they've integrated Messenger, Facebook Messenger, into TransferWise, which is a money transfer provider across borders, and to Visa. You've seen that they own WhatsApp, and you've seen WhatsApp is now embedding the ability to pay people from one point to the other. These are all embedded financial services that are starting to come through these platforms. And the people who obviously have been the most successful globally in this is China. China has literally built what we call the BATs, the Baidu, Alibaba, Tencent, which is the FANG equivalent in China, have literally built some of the largest product-centric approaches to asset aggregation in the world. So Wechat actually, through its platform, has aggregated the largest money market fund in the world. And it's done that literally through small amounts of money that people save through the Wechat platform. So really, you start to see this very much as a way of rethinking the customer experience and embedding this into, and that's where the banks and insurance companies, I think, should be playing.
Sure. Yeah. I think even your video did touch upon this. As so we are in an era of high touch and high tech. Okay, in a world of artificial intelligence, robotics, IoT, and others around it. Okay, so do you feel that that we will lose the human touch, or do you feel that the digital natives really are not looking at human touch as perhaps what we experience?
Yeah, I don't think the digital natives are looking for human touch. I think what you'll see increasingly, the initial most of the customer journey digitally is going to be driven by chatbot technology that's driven by AI and machine learning. So your interaction digitally with a chatbot interface, or with an interface, is largely, and only if there is at the very last mile the need for a human customer intervention point to maybe close out a product, or if it's a very complicated experience that needs to be, you'll see that. But the journey will largely be driven by AI, chatbot, and natural language processing capability. Now, that also has profound consequences for the banking industry, because what it means is that we will go for very significant automation in the middle and back office for the financial services industry. We will be removing a lot of human interaction, interface, touch points through that process, because that creates efficiencies, and creating those efficiencies removes cost. And as we move down, we are going to move into a much more efficient world, which is going to be much more hyper competitive, where for financial services, it's going to become a cost and scale game. It's not going to become a capability game, because the capability game is going to become very commoditized. And so where you compete on is going to be on cost and scale. And so I think in order to do that, you're going to move down this automation route.
Okay. Thanks, Udayan. So, like always, I say this point at this point of time that participants can put in their questions in the Q&A box, and I will try to get it across, Udayan, so that your queries can be answered. We also have another mode where people can put up their hand and say they would like to talk directly to Udayan. That also we would like to consider, and so we have already one person, Udayan, one Jayat, who will ask a question to you directly on audio. I request Jayat to unmute yourself and ask the question.
Yeah, hi, Udayan, can you hear me?
Yes, I can.
Yeah, so the thing is, we focus a lot on smartphones, digital revolution that, frankly speaking, has not taken place in India. And my question is two parts. One, are we focusing on a global perspective, or are we focusing on an India-centric perspective? And if you're focusing on an India-centric perspective, my question is this. Yes, digital natives, are people who are born in an era of, like smartphones and laptops and computers. But what about a major chunk of the population that does not have access to this technology, which is like 900 million? And I feel like every time we focus on, any sort of change in banking, it almost always caters to this small segment of people where we keep bombarding them again and again with, different advancements. But the underbanked stay underbanked, because you have initiatives like Jan Dhan Yojana, which, frankly speaking, hasn't seen its logical conclusion. So what is your take on that? Because AI chatbots, I agree, it's going to bring about a drastic efficiency in the system. It'll reduce cost. But then what about the people who are not even familiar with the basics of banking?
Thanks, Jayat.
It's a good question. So let me answer, because there's a few things embedded in there. So let's take each piece by piece. The first part of it is this an India-centric or is this a global-centric approach? It's both. I don't think there is a significant difference between what's going to happen in the world and what's going to happen in India. There may be a little bit of a difference in timelines. It may take India a little bit longer, but India has a lot of things which the world doesn't have. And one of the things that India has, which is very empowering to a digitally native cycle, particularly for financial services, is the concept of digital identity. Through Aadhaar, what you have is the ability to solve one of the biggest pain points in digital and most of the other parts of the world, which is how to identify somebody on the other end of a smartphone or computer or tablet or laptop or whatever it is they're sitting on. How do you actually identify it? And if you can do that biometrically, then you kind of solve that issue of identity. And by doing that, you can really accelerate the rollout of certain products. Now, obviously, there are legal challenges and all sorts of things that will resolve themselves over time. And the ability to do that, I think, my friend Suresh Sethi, who used to run India Post, has done a great job in rolling out services to the last mile with, very much digitally enabled through the use of some of these technologies at India Post Bank. So I think that a lot of that is being, already, you already start to see that, very, very well across now. Now, on your point around smartphones, yes, smartphone penetration in India has been, growing, but it's still low, and feature phones have still been the majority. The number of smartphone users in India is expected to double by 2022. That's what the stats say, to about 860 million. Today, they're around 470 million. So that's, a growth rate of about 13% a year since 17. So we will see very significant growth of smartphones. Now, one of the things you may have been reading in the press recently has been all this very interesting activity around a business in India called Jio. And Jio has been taking enormous sums of money, investment monies from well-known investors in our space, such as General Atlantic and Silver Lake and others, and there will be others who will come in. And you might be asking yourself, well, what's going on here? And I think what's going on here is a realization and almost an anticipation of the uh, very significant acceleration towards digital. Geo over the last 5-10 years has built a very significant broadband as well as mobile network that is ubiquitous across India. And what it's also done has reduced the cost of data access to the Indian consumer, both in rural, semi-rural, as well as urban space, down to more affordable levels than they used to be. So what it's doing is it's democratizing the availability of data to customers at the last mile. Now, what that in itself does is becomes an onus in itself for people to move away from feature phones, because most people who were on feature phones did it because the cost of data was unattainable, unaffordable, and therefore there's no point of having a smartphone. With that, and obviously with the availability of very, very uh, reasonably priced smartphones that come from China and are built in the emerging world, I think that smartphone penetration will dramatically increase over the next few years. And as that happens, I think people will embrace the embedded ability to move money around either through UPI or similar services, uh, and as has been embedded in let's say WhatsApp and other types of services. And people will become much more habituated to doing it in the same way that what happened in China. China now, everybody pretty much is on a smartphone. Everybody uses those smartphones to do everything, including move their money around. And I mentioned a little bit earlier about the success of Wechat. The Wechat messaging app last year was used to make a staggering $1.2 trillion of payments, and that was up from $11 billion in 2012, right? So in the space of kind of 8 years or 7 years, they've literally increased tenfold. So what you see is this, and on top of that, you have this huge trove of user data, because every time people are making payments, the platforms understand what they're making the payments for, and so there's more customization, so they can then anticipate what other services to deliver, etc. And as people become habituated to these services, you'll see an acceleration. And I think that acceleration is driven by what I talked about earlier, the ubiquitous availability of data at a price point which is very, very reasonable, and now all this significant investment. And you'll see that investment is coming in from some of these large technology companies, the FANGs and some of these others, because now they want to play in that digital ecosystem. And they understand that India is one of the largest markets in the world by population, and over time will also become one of the largest markets in the world by revenue. And so I think this is what you're starting to see played out.
Okay. Thanks, Udayan. And thanks, Jayad, for the question. So we will take another question directly, Udayan. The question is coming to you directly from Murthy. Murthy, could you please unmute and ask the question?
Hello, can you hear me?
Yeah.
Hello, can you hear me?
Yes, we can hear you. Yeah.
Fine. It's the larger, more philosophical question. Of course, I liked your video, which you probably have shown it at Cybers. I think you gave a very good explanation of the way things are going to evolve and emerge. I think I should compliment you for this. But my question is, and the broader question is digital divide, right? We have Bharat and India. So related to Bharat, I think the gentleman before me has already asked the question, so I don't want to repeat that. But so I'm an advocate, a digital advocate. Don't mistake me when I ask this question and all that, right? So while the questions of this Bharat remain, classic example is these migrant workers we have seen. We don't have even a count, forget about it, right? Even the economic survey of 2017 uses gravity model to find out how many human beings are involved in the migration. I mean, we are taking it too far and all, right? So that we will leave it apart. We have just started our journey. I fervently believe that we will probably cross a lot of distance in the years to come, 1 to 2 years. And I also believe that is the only way to probably provide banking services to the unbanked, brick and mortar, probably you will not be able to do even for the next 1 century, being a banker. Now, my question is on the Indian side, right? More or less, we compare with them the baby boomers, which Mr. Kumar has referred in his introduction. So today, the likes of Facebook, Google, Apple, all these have created what you know as prediction markets, right? Predict what customers want, right? Based on our conversations or with the photos we post in Instagram or the messages we do in WhatsApp or whatever it is. So all these have created a prediction markets, prediction of what the customers would want. So given this, where do you see the data privacy and surveillance capitalism in this context? Am I clear?
Yes, very clear. And a very interesting and a very controversial question in this time and age. And so, look, I think let's break that down into a number of different silos, right? First silo is logically, morally, data belongs to the person who created it, right? So if I create some data that relates to me personally, I believe that the ownership of the data ultimately should reside with me, right? It's part of who I am. So, think about it as identity, and our identity and who we are is something that fundamentally belongs to us. Now, I think most governments have recognized that, and they've recognized that, and they understand that there are institutions around the world and companies that are looking to use that data to create economic gains for themselves and to deliver services to customers, not necessarily to exploit customers. This is a symbiotic relationship. However, like in anything in the world, these things can be exploited. These things can be, they can be abuse of that data, and they can be misuse of that data. And so, as a result, many governments have created significant data privacy laws. GDPR in the European Union is a great example, and most other markets around the world have followed similar sorts of group of legislation as GDPR to create data privacy. So now what they're trying to do is actually say to customers, you own your data, and you have the ability to provide access of that data to customers, to companies, to be able to provide you services if you want to, and therefore the companies need to ask you explicitly, not implicitly like it used to exist, whether they can use that data to provide you a service. So we're starting to see now a data framework which starts to allow companies to be able to do that. So that's kind of the trajectory we were going through. Now along came COVID. And I think COVID has going to have very profound effects on privacy, the surveillance state, some of those issues. And what governments are increasingly sort of arguing is that we actually need to have more data on people because it becomes something that's of the national interest from a security perspective, be that health security or whatever it is. So you may be reading, and we're talking a lot about this concept of contact tracing, where if somebody has had the disease, and we using smartphone technology to be able to know who they've come into contact with to trace it. The Chinese have used this extensively through their system of red, amber, green, where everybody, let's say in the affected regions, had to download a smartphone application through I think it was actually embedded in the Wechat, and through a use of facial recognition technology and cameras in places, and also proximity alerts between the phones. Basically they could tell if you've been near people, and then they can also tell what kind of a risk you are, and if you have a red, you had to stay and self-isolate, or you were not allowed to use public transport. And they'd been doing this already previously in something called social scoring, where you had a score which looks a bit like your credit score, but actually it's a social score, where they measure all sorts of things, including any criticism you may have of the state, and give you a score. And if your score gets too low, you can't use transportation to move between cities. And things like that. So that now, once people start talking about those kinds of things, we all start to get quite worried, because we're largely civil libertarians and we want to maintain our freedoms and also maintain our privacy. But that's where this a little bit of encroachment is starting to come in as a result of what's going on with COVID and others. And so actually now I think the debate, and it's going to be a debate that's going to be played out around the world, is going to be how do we balance the needs of some of these issues, such as health security and security of the state and other things, to the protection of private information and customer information and our own privacy, to the availability of that data itself to be able to be used to provide us customized services, which, as consumers, we may want and in fact need. And especially for those consumers who are at a lower price point, it becomes a very necessary part, because the ability to provide them services at a lower price point necessitates the use of that data. So I think we these are the sorts of things that we're going to increasingly start to be having to think about.
Thank you, Udayan. And thank you, Murthy sir, for asking this question. Good to have you, Mr. Murthy. Mr. Murthy is the ex-NPCI chairman and chairman of Corporation, ex-chairman of Corporation Bank, and ex-CEO of IDRBT. So good to have you, sir. So let's move on with our questions. I have a question from one of the participants. I think you have answered it. So the question is on digital banking, and it says, will it be effective to the Indian mass who still doesn't know how to operate a smartphone? So the question, I think you have answered the question, saying that the penetration of smartphones is happening. Is there anything else you want to add to that, Udayan?
Well, I think the concept, I think the only thing I'll add to you is the concept of digital banking, which is logging into your bank through your smartphone and looking at your balances and all of that. I mean, that's very bank 1.0 type stuff, right? We are way beyond that, right? So I think digital banking in a bank 3.0 scenario is very much sort of how embedding all of this. So rather than saying, logging into your bank account and checking the balance, you'll be saying, hey Siri, what is the balance on my account? And Siri will use the authentication mechanisms available to it, go in, check your bank account, come back and tell you what your balance on your account is. And this is where we're going to go with it. So I think, it's a very embedded service. And I think, and to the first part, yeah, I believe that, we will have ubiquitous smartphones, and we will have ubiquitous data that most people will be able to get access to their balances and what they have through these digital means.
Sure. So, Udayan, coming back to our where we went on from customer engagement. So let me get to customer centricity. Okay, so that's the topic that we were talking about. And so, what is customer centricity, and why is it so essential for banks?
So, I mean, customer centricity is this concept that you essentially develop products and services around the needs of a customer, right? So rather than so I think, if you think about traditional banking, you had a group of people, unfortunately, typically men, sitting around a table and saying, oh, let's design a new financial product, and then we'll market that financial product and sell that financial product. Through that process, there was very little thought given to what the customer needs themselves were. They were just designing a product which they thought the customer would consume, right? That concept, I think, is rapidly falling away for many reasons. One is, as I mentioned right at the beginning of this, we don't wake up in the morning and think about which financial product we're going to buy today. That's just not the way we are, right? We think about what we need and then how financial services can actually empower or actually help get us what we need. And I think that's the centricity point. The centricity point is that banks, insurance companies need to really look at the data. So, if you remember the video, we talked about the video. At some point in the video, the couple that are in the video have a child. And when a couple has a child, the needs of a family change from when it's a childless family to the first child, and then into subsequent children. You may need a bigger house, you may need a bigger car, you may need different type of insurance. Your health insurance needs change, your savings needs change, because if you want to send your children to private school, you need to save for it. All these things, and that's anticipating those needs based on the life cycle of the customer, and back to customer centricity. So as your ability to use these disparate data sources and to provide those kinds of services, it becomes a way of actually pushing out, the right product embedded into the right experience where the customer. So in that case, it was, they suggested a new car, and embedded within the new car was the financial services, which is insurance and the financing for the car. So it was all sort of done together. And so I think that's kind of where we're going with customer centricity.
Okay. So according to you, is improving customer experience the most important aspect of centricity?
Absolutely. I mean, it's all about. I mean, I think, as I talked right at the beginning of the video, we say customers don't consume products; they consume experiences. So improving the experience is what customers are looking for, not improving the product or the product itself. So yes, it's all about the customer experience.
Okay. So Udayan, in your view, what are the common strategic gaps in banks' customer-centric agenda? Do you see any such thing, or you would advise banks to kind of what they should be doing?
Well, I think they all banks, insurance companies, others need to not basically have a chief customer officer, not necessarily a chief product officer. And that's the mindset that needs to change, right? The mindset that needs to change is we are not delivering products to our customers, we're delivering experiences to our customers. And how do we optimize the delivery of those experiences to our customer? How do we get that right experience out to our customer? And once that mindset changes, then you literally are able to deliver what actually the market requires you to deliver. And so this is a very much a mindset. And within that mindset change, obviously, it requires a fresh group of people who think that way. So, what I find a lot of very, the more forward thinking financial services companies are very much hiring and adding people that come from other industries, which have a much more significant digital delivery cycle. So whether that's e-commerce or whether it's services that were delivered, digitally, they're picking up those people who understand how to deliver services and experiences digitally and bringing them into the organization, and then starting to rethink some of their strategy around that.
Okay. Thanks, Udayan. So I want to take another question directly from one of our participants. So I request Nishit Kumar to unmute, introduce yourself, please, and then ask the question, please. Thank you. Nishit?
Hello.
Hi, Nishit.
Yeah, I'm Nishit Kumar from Bank of India. I'm senior manager in Bank of India.
Okay, thanks.
In this, I have just one question, sir. That after COVID, you have said that mortgage, you have already told me that if after disbursement, after sanctioning of loan and mortgage part we can do online. We can do online mortgage part. It means that it can be done through our house only or our bank only. We have not to go on site.
Okay. I mean that you see, that depends on the infrastructure that you're in. So why do we typically, let's say in a mortgage journey, why do we typically have somebody go and check the property on site, right? There's a reason. Or why do we go and meet with the person traditionally? Traditionally, we met with the person because we wanted to identify the person, and we wanted to make sure that that person who was borrowing is the person we thought we were, and we would take a physical signature, which would therefore say that we've identified that person, and check some identity documents to make sure who that person. All of that, as you know, can be replaced by Aadhaar and digital, right? You can take a fingerprint online and you know that that person is the person because you've got or a retinal scan or whatever it is that you'd like to do. Okay, so say much in the same way, when you think about the property, the reason you go and check the property is that part of the reason, especially in emerging markets and other markets, where one needs to do that, and actually it's even in developed markets one needs to do that, is that we have a very antiquated way of thinking about property ownership, right? So how do we think about property ownership? Property has a property deed. That deed is stored in some central cadastral authority who will essentially have notes in that to say that this property is owned by so and so, and then they stamp a piece of paper which is the deed which says that you own that property. Then the problem has been that people will hypothecate that property to a provider who will provide financing, and typically the hypothecator, the person who's actually hypothecating the property, will take the deed as a document that is collateral against the property and provide financing against that property. Now, in some markets, you have fraud, and in many places where they will create multiple deeds and then hypothecate it multiple times. And so then when there's a bankruptcy situation or a situation of credit stress, you suddenly find out that there are multiple people who have lent against that property, and then you have to go through a dispute resolution process. And so a lot of the processes that we have in place for housing finance are there to remove some of these risks and to also make sure that the property actually exists, that there is a bricks and mortar that's there, that what you say on the document. A lot of this can be solved basically with the adoption of some of the new technology. And one of the technologies that we've talked about extensively, and we are talking about extensively, is the underlying technology of blockchain, which is distributed ledger technology. And what distributed ledger technology allows you to do is essentially make sure that the ownership of a property or the ownership of any property, it doesn't have to be bricks, it can be anything, can only rest with one person at one time. And if you hypothecate that property, can only you have full traceability of that value chain. And in order to do that, it relies at the first instance to do what's called an attachment to in inverted commas, coin at the point, and that coin is basically represents the property. So if you think about every property in Bombay, then you are, if you think about every property in Bombay, what you can do is you can go to each property, document that property, and then attach that to the coin. And once you've done that one off, you never really need to go back and look at that property, because the system itself provides the integrity that you cannot have multiple hypothecation, and that property exists. This is something now that they're adopting in markets. So I know in Ghana, there's a company that's starting to do this. Ghana had a real problem with the housing finance market because of this issue of multiple hypothecation, right? And so what they were doing is they've gone now area by area, and they're replacing the cadastral authority for property ownership with this blockchain-based, distributed ledger style system. And then once you do that, the banks can come in behind it, and they don't even need to look at the property anymore. All they need to know is that that deed is attached. They know that that's all been verified, and because it's been verified, it doesn't require you to go and see that property. So this is the way I think the evolution will happen. Of course, all of this takes time because you have legacy systems that need to be replaced. But once you replace these legacy systems, then you can create these efficiencies.
Okay. Thanks, Udayan. So one participant asked a question. He hasn't mentioned his name. Most of the talk about CX is about retail customers. How can CX be transformed for SMEs, corporates, etc.?
Well, I think, again, we're starting to see why should an SME and a corporate be any different from the CX, customer experience CX, that you provide to regular consumers. I mean, if you think about it, the people who sit in the corporates and the SMEs are the same people who are regular consumers. Now there's a real example of this. Now, many years ago, we used to go into an office, and on our desktop would be an IBM PC equivalent, and we'd be on Windows software.
Mhm.
And then at some point, there was this evolution of something called the BlackBerry. And we used to have these BlackBerries that we could go around with, where we would do email, which was the first real sort of mobile email. And for many, many, many years, especially the financial services industry refused to let you do anything other than using Windows-based PCs and BlackBerries because of security concerns, right? And then what happened was that over the years, a lot of us started to get Macs at home and Apple iPhones and Android phones and other things. And the technology we would have at home would be significantly more powerful than the technology we had at work because of these security concerns.
Yeah.
And what happened was that the financial services industry had to acquiesce and say, you know what, actually, we've got to create a more open architecture way of letting, because people's experience, customer experience, is inferior here than it is when they're doing their consumer. And so they started to align the customer experience so that people could access their email on their iPhone or on their Android tablet or whatever it was, and to be able to do things. And so this is, so I actually think there's, you know, there's very blurred lines between consumer customer experience, consumer product customer experience, and SME and corporate customer. The expectation is going to become pretty much the same. So you're going to have to deliver it very, very much the same. So if you're a treasurer of a large corporate, why can't you look at all your statistics and your cash management and everything on your iPhone? Why do you have to go and log into a PC and have it on 15 windows? Why can't it be in a nice user interface which shows your balances with each bank overnight and whether you can move them around? That's all becoming a reality. That's where people are expecting to go, and that's what's going to get delivered.
Thanks, Udayan. Udayan, what emerging technologies are best positioned to deliver the game-changing customer engagement? Could you name a couple of them?
I mean, obviously, I talked a little bit about on the back end, the distributed ledger technology creates massive efficiencies. On the front end, it's a lot of it is going to be around artificial intelligence, robotic process automation, you know, chatbot, the natural language processing, so that, you know, when you're doing bot-based discussions or either on chat or even talking, it becomes very natural. So it feels like there's a human being on the other side. That's gonna rapidly develop, and people are going to rapidly pick it up. Processing speeds are going to increase. The ability to do data integration across multiple platforms to provide massive customized services is going to increase. So all of those things are coming together very, very quickly, and that's going to massively enhance customer experience.
Okay. So you could. A question I have is, what role will self-service DIY tools to play in customer experience in the future?
So yeah, so what role do DIY tools have? I mean, obviously that is in my mind related to you know, basically data partitioning and security. So the DIY side of this is all going to be that over time we're all going to set ourselves up to have control of our own data, and then what we're going to be doing is actually managing the permissioning of that data to providers so that they can provide us services based on that data. And so those are the kinds of DIY. I think people are already starting to take control a little bit of how, you know, the data that sits out there, how do they take it, and using some of those tool sets.
Okay. Audience, can you tell us some wow factors in customer engagement? I'm continuing with my customer engagement story.
You know, there are so many wow. I mean, you have to just go out and look at some. I thought the CBA product that I talked about earlier, the Commercial Bank of Australia mortgage product, is super interesting. You know, I think that basically the way you know, people's journey was suddenly changed from which was a very human touch, heavy centric, going into branches, doing all of that, to a pure digital journey creates a wow factor. I think as we move into an IoT world, and I talked about this previously, and you move through smart cities and your tolling is all done automatically, your parking fees are taken automatically, everything is done very much seamlessly and automatically. I think that's where you're going to start to create these wow factors, and people are going to appreciate, you know, how this embedding is going to make a huge change to their lives.
Yeah. So the last question I have for you is that banks, I think, don't need to be convinced of the need for digital transformation. But while developing new products or revamping a legacy system, under new technologies, is there a focus on customers' need to keep them happy while having to deal with products and technologies?
Well, I think I talked about this extensively, right? I think that is where the focus is going to be. It's going to be on customers' needs, and then the customers' needs are going to drive the products and technologies, right? Because it can't be the other way around. It used to be the other way around, and we moved from that now, and we're moving rapidly from that because that's where expectations are. So we have to move rapidly from that. So I do believe that's where we're going.
Okay. Thanks, Udayan. It was another wonderful session with you, as usual. And you give a lot of incisive information, and I'm sure even the participants have enjoyed listening to you. So I did mention that EPS is a sponsor of Roti Bank. Okay, so the Roti Bank is a non-profit, food rescue organization, and it is registered as a trust in Mumbai. And the Roti Bank initiative is driven by its visionaries and enthusiastic team who are all set to scale up the activity significantly. Its mission is to bridge the gap between hunger and excess food. So we would like you to look at this short video and help us in whatever way possible the Roti Bank. Yeah, that's it. So once again, thank you very much. And I look forward to talking to you on some other topics in the near future.